What's up, YouTube? So today we're going to be going over liquidity sweeps, what they are, how we can use this to our advantage, and why do banks and the institutions use liquidity. The definition of a liquidity sweep is people going in and out of the market, therefore creating liquidity for a potential for banks and institutions to fill their orders. Therefore they can change market direction in whichever direction they want, up or down. Now there's two parts to this. It's called buy-side liquidity and sell-side liquidity. These terms mean that if there's buy-side liquidity, that means there's resting orders above the most recent high, and if there are recent lows, there is sell-side liquidity. Banks and institutions most likely going to do target that because they need to fill their $10 million, $100 million orders in order to have enough capital to be filled. Therefore they can change the direction of the market. They need to target sell-side liquidity so they can go back up to the upside. The more liquidity they have, the more they can move the markets. Alright, let's get into the chart portion of the video. We are on a monthly time frame, and time frames are super important. Whichever time frame you use, stick with that time frame and go lower. Do not go any higher, just stay on the time frame or go lower. This is buy-side liquidity. Price made a high back over here and price swept buy-side liquidity and moved the other direction. What did price do over here? Same thing, price wicked up swept buy-side liquidity and made a drastic move down. What did price do again? Target buy-side liquidity and made a move down. Usually it pops around or makes a drastic move down. Now I'll show you the sell-side liquidity. So this is sell-side liquidity. You want to take the most recent high or low that was created that never got taken out and use that. So right here, or you can use higher time frame or older liquidity like I did, but most likely in lower time frames you will be using the most recent liquidity. Sweep of liquidity targets this liquidity up here and here. Liquidity can be used for take profits as well. What is liquidity candles on this chart? These long wicks are liquidity waiting to get filled. So this is a sweep of liquidity, then it targets this liquidity. Now we're going on the weekly now. Alright, guys, this is weekly liquidity here. Sweeps that liquidity, targets that, goes down to this liquidity area, goes back up, retraces up just a little bit, and then heads back down. But that's still a sweep of liquidity. Right here is a sweep of liquidity. Now let's go into a daily time frame. So therefore we're going to start targeting daily liquidity. So right here, this is the most recent boom liquidity sweep. Could have targeted all of that liquidity for take profit. Sweeps liquidity. Boom changes the direction. Over here, that's a sweep of liquidity. This is all liquidity up here in here. What is this guy's sweep of liquidity? Even that, but I should say that it makes them move down, targets this liquidity and all the way down after that big liquidity sweep from here. Guys, I'll show you another one. Right here is sweep of liquidity targets. This liquidity targets buy side, liquidity boom makes a move down. We're on the daily, so you can go into 4 hour, 1 hour, find an entry. Alright, sweeps. The daily liquidity boom makes this move to this fair value gap. Alright, so let's go into the 4-hour chart now. So on lower time frames, they happen more frequently. So sweep the liquidity targets. This liquidity boom instantly takes it out. What is this, guys? Liquidity sweep, boom, drastic move. What is this, guys? Liquidity sweep? You know it's going to the 1 hour now. Hopefully you guys are getting the hang of sweeps. Liquidity takes this liquidity out, makes it move down, and proceeds to head back up. Thank you for watching, and do this on your charts too.